is riffing.
My tummy hurts. Pretty good, right bad. Hey guys, what's going on? Nick with Off the Chart Trading. I'll be doing the video for Tuesday, January 4th, the first video of the year from me. Hopefully you guys had a happy and safe new year. Let's just dive right into it. So today felt pretty uneventful, to be honest. One thing that caught my attention, and I guess I don't want to say conflicting, I never make a decision off of one data point, but we did see a little bit of weakness in the NQ this morning, and I did notice that gap up in the TNX, which is the basically the 10-year interest rate. So I was kind of like, that could be correlated. Funny enough, I didn't really see anything. Not that I really watch CNBC, but I do have it on a little screen through TOS, just to keep up if there is any headlines or, if there is somebody that comes on that I want to listen to. Sometimes turn it on for the room or whatever the case may be. But no one's really talked about the 10-year that I'm aware of over the last couple of days, but it's increasing quite rapidly. I mean, we're not that far from when everything was getting a little worrisome, like, oh, it's getting up to 1.7, 1.76, etc. Then it cooled down and no one really talked about it. Even when it came back up a bit, back to around these levels, the NQ really didn't really seem to react too much. So I'm not 100% sure if there was any other reasons today, honestly. I don't really focus too much on, I shouldn't say I don't focus on macro, it's just there's so much information. You go on YouTube, there's 50 people that's going to tell you why today's price action reacted the way it did. You turn on the news, depending on what news channel it is going to tell you something. So, and obviously there's always some type of, peg. The NQ was down at the lows 2% today because of unprecedented times in COVID. So, there's always some type of thing they try to stick to a headline to match the price action, and sometimes it's just the price action. I mentioned in the room too today that it felt weird. I don't know, I was expecting more for the beginning of the year. Typically, historically speaking, the most inflows and all that type of stuff happens the first week of January. So here we are, finishing down on the day or flat on the ES. I think the only one other than that was the Dow had a pretty solid day, but everything else was kind of uneventful. I'm doing this video at about 5:45 right now, so the futures are closed. So I'll be curious to see how they open, but not the best day, but it's kind of uneventful. But you did see a little bit of a downtrend and then a little rebound into the close, but nothing too crazy. Like I said, I was expecting more. I don't know. I was expecting the tempo to be more oomph. Sometimes hard to articulate whatever. When you look at all these flashing lights and up and down and different lines and pretty colors, it's sometimes you know what you're processing, but it's hard to, I guess, speak into a mic and say clearly what you're seeing. But best thing I could say is it just felt off today. It felt weird, and I was expecting more follow through with a lot of the trades. That's why I started this internal screen. Like I said, that gap up didn't really seem to react too much until, even though, once again, trend-based candles, majority of the day, just summing it up from where the volume is from here to here. It's not a rocket science. That's why I like these trend-based candles. It's simple. What color do you see majority of? I'd say about 80% was red. So we spend 80% of the day below the 34. So, downtrend. Now, I was thinking that we would see potentially, since Amazon was kind of, decent yesterday. My first trade out of the gate was Amazon. And that did not go too well. I'll pull up the chart in a second. Let me see. I think that's number 2. We go to 2. Yeah, there we go. It was right around here. It's probably the first, I don't know. These are 2-minute candles. So I'd say probably 10 minutes into the day is right around here. It was kind of consolidating. And I just assumed that we could see some movement in Amazon. Because it's I'll show the daily chart and the weekly chart, because it looks like it's set to go higher. With the squeezes and stuff, obviously it could fire short and we could have a pretty decent pullback in Amazon, but it's Amazon. Kind of like when you say it's Tesla, it's Apple type of thing, it's a heavyweight. So you just naturally assume, because that's what they've done over the last 10 years, is that it's going to go higher. But anyway, I was looking for more of a day trade or just to see, catch maybe 20, 30 points, but that turned around real quick because up here it was up, I think, about $10 on the day or so. Got in around, I don't know, somewhere in here. Was up a little bit. I think it was up 200-300 bucks, and then just pukage. And then I think I got out somewhere around here once it did break below that lower support, and it broke out from that was a clearing range trade after that first 30 minutes. I got out over here. I was like, all right, I'm not giving it any more room. I try to hang on as best I can because nothing's more frustrating. I know every single person listening to this can attest to that you get out right here and that's the low of the day and it just goes up and oh man, look at Amazon. Why aren't we long Amazon? It's up 50 bucks. So I try to hold on. Like I said, I held on for about almost 30 minutes and then I wasn't liking the price action and what we just looked at on the internal screen with the TNX up, the NQ under pressure. It wasn't an aggressive selling or anything like that, but it didn't feel like it was going to potentially head higher, especially after that first 30 minutes. So I got out somewhere around here. I think I was saying like 33.80 or something along those lines. So maybe it was closer to over here somewhere. Maybe it was this bar that broke, and that's that second level of a deviation right there from VWAP. So once I hit that, I'm just like, and then obviously we can zoom out and say, wow, that was a good call to get out. So it was a quick hit. I think I lost like 50% fairly quick, but it's always hindsight. But at that point, getting out over here, you can see how much lower and how much more pain I would have. I probably would have been down 80% or so at the lows. Granted, my luck, Amazon will finish the week up 3,500 or something. But once again, when you take it as a day trade, it's best to follow whatever plan there was for the trade. I try to give it as much time as possible, and it just didn't end up working out. But one thing I'll show you guys is, it looks real good. Today's price action on the weekly, it's the second day of the week, so not a huge, a lot can change in this candle before it closes, but not the best action to see it go below the zero line and go to red, but it's been in a squeeze, for almost what is that, 2 months and change, just about 2 months, and then you have that nice daily squeeze setting up. But granted, you don't want to jump the gun because, you might see 5 or 6 more red dots and then they might start turning red and potentially drop lower, and then this squeeze could ultimately fire short. So it doesn't look great, but especially yesterday I was eyeballing it when it closed above its 200. I was looking for potentially some continuation, just once again because it is Amazon. It didn't do anything all of last year, and I'm expecting it that if this squeeze and this squeeze does fire, if it's up to the upside, we'll probably see new all-time highs in Amazon. But it's like I said, so far second day in of the year, and it's just not looking too hot. So it might consolidate, it might trade sideways to up until we see earnings. It's obviously too early to tell, but not typically what you want to see when it comes to the first week of the year, when it comes to overall price action. And we were talking about that in the room with the Stock Almanac, which we have on the site too, so people can see the important data. But it basically, what it is the January's first 5 days act as an early warning. If the first week's down, then there's a chance that we would finish down on the year and vice versa. So I was cross-referencing it, scrolling through it, going back to the 1950s, and there's some truth to it. Some weeks were bad and had a bad year, and then some weeks were up and had an amazing year. But then there's also starts out bad and finishes up strong, and starts up strong and finishes on red. So I don't put too much into that, but it is something to be aware of, that potentially how we start the year is how we could finish, but you just never know. But anyway, figured I'd show Amazon because that's really one of the only trades I took today, which, like I said, kind of got hit in the head with that. But like I said, glad I got out of it. One thing that I also, like I said, yesterday was a great day for me. A lot of these growth names and a lot of these tax loss type ideas that we had. We got in on Thursday. I jumped the gun because I did see a lot of buying in all of these names that I wanted to, because we had a webinar on Wednesday, and Thursday, sure enough, Thursday morning, people are buying it like it is, the first trading day of the year. So that caught me off guard. So I got in most of these on that day, and funny enough, they were all up. All 5 or 6 of them were up quite nice. Going into Thursday's close, I was up probably 20, 30, 40%, if not more on some of these, and then gave some of it back on Friday, which to be expected last day for tax loss. Peloton being one that we're looking at right now, from 171 to low 30s. That's a pretty big hit, and a lot of people are going to use that as tax loss. But one thing, yesterday was kind of meh, and I gave it some more time today, and it's just more lows. So it did rebound over $1 from its lows. I'm still in the trade. Honestly, if it was a January trade, if this expired in 2 weeks or so, give or take, I'd probably get out today. But the fact is, since I'm good till February, I have earnings as a potential buffer, and I just don't see Peloton going. I mean, I was talking about this in the room, but you're literally back to the end of 2019's highs. When the company just went public a little before that, obviously it hit lows with March, and then everyone's like, oh, people are staying at home, lockdowns, Peloton, and then boom, the rest of the year was just straight up, and we killed Peloton. Like I said, I don't know if I mentioned in a previous video as one of the ideas, but I think we probably took like 30 trades and 28 of them were profitable. So we killed Peloton all through this, and I didn't honestly touch it past the beginning of this year, or it's just like last year. And then it looked very appetizing, once again, just simple, just dropping right there and saying, we had higher prices at the end of 2019 in this name than we do now. And I would assume that there's more people that have Pelotons, me being one of them now, than before this pandemic started. So did it make sense for it to go to 171? Maybe. I don't agree. I said in the room when it hit that around 170, like, this stock's going to have to get cut in half. All these stay-at-home trades are going to get cut in half, go back to somewhat of fair valuation. But to me, it's a bit, oversold. I wonder how it would look. I'm just curious on that. It's actually only at the 2 deviation. So the 2 ATR move, I was expecting it probably to be a little lower. But anyway, just wanted to take a look because I was curious. But I would think that we would see somewhat of buying coming in, them rolling out people, especially at the beginning of the year, that either made money on the way up or made money on the way down, buying it at these prices and then rolling them out to the talking heads on TV to say, oh yeah, we like Peloton. And they'll use the exact same, I mean, we're back to levels that we saw pre-pandemic. They added, I don't know the numbers off my head, 1,000%, more, growth than they had back then, and they've sold more bikes, and their athletic line or whatever, they're 10 times what they were the end of 2019, and yet we're at the exact same price, which to me is a fair argument. I'm just saying though, people are going to be buying it, but I'm just shocked that we had new 52-week lows today. So I'm going to keep an eye on this one. Like I said, I felt to get out, but I'm like, you know what, my luck, I'm going to get out here, and this stupid thing's going to be at 40, 50 bucks in the next couple weeks. So, but I mean, obviously it could continue to trend down. It could be a $25 stock in 2 weeks. Who knows? But I did end up staying in that one. What was the other one that I'm in? T-Doc also got hit. I mean, all these names either saw new 52-week lows or pretty darn close. So this one got hit. It still has that nice squeeze setting up. So I'm still in this one. Obviously not going the right way. Lemonade, man, up a lot, down a lot, up and down. I mean, I had 3 chances over the last 4 days to get out of this one. It hit new 52-week lows, but at the end, bounced back $1. So I'm keeping an eye on it. Also had that squeeze, kind of rocky right now. I guess you could say technically it's firing short, but we'll just have to see how it goes into to tomorrow. Corsair is another one. I like Lemonade and Corsair because, one, they are at 52-week lows or lower. And then 2, high short interest. I think Lemonade's 30, 35%. Corsair 25%. That's a nice squeeze. I mean, the pattern looks good. And I talked about that before, especially with how this market's been lately, is you can have a great setup, but if it's not Apple or Microsoft or any of the big ones, the markets don't really seem to care. It's almost like it's being filtered into a handful of stocks, which is kind of worrisome to me. I wouldn't want, not that the market asks me what it wants, but to have Apple and then, add Apple and Microsoft. Well, that's, 15%. And then you add 3 more stocks and, that's 40%. And then you add 10 stocks and it's 60% of the entire, when you get to those types of numbers, it's a little alarming how much control a lot of these stocks can have. Because realistically, if 5 or 6 stocks have a bad day, it's going to pull the market down and look like a freaking market crash when some of these stocks could be doing really well. So anyway, Corsair still remains to look good. DraftKings as well. Looking all right too. I don't think it didn't. No, it didn't hit 52-week lows, but same I mean, like I said, a lot of these were down. They all did close off their lows, which is, I guess, something. But that is something that I'm keeping an eye on into the rest of this week. All of them are good till the monthlies for February, so I still have plenty of time. 6 weeks, a lot can happen. So, like I said, not the start I was looking for, and typically the beginning of the year, anything that was beat down, that's a I don't want to say a household name, but maybe something that you see the ticker on CNBC or Fox Business or Bloomberg or whatever you watch. If it's been mentioned maybe once a day, then that's typically a sign that, Wall Street keeps an eye on it. And, most of the time buying when something's 50, 60, 70% off is considered good. But in this market lately, not really. Once again, unless it's not Apple or Microsoft, a lot of people don't seem to care too much what's going on as far as fair value and a lot of this other stuff, especially with all my growth stocks. A lot of growth stocks got hit today, kind of undoing almost that really nice. I mean, almost completely undoing, like 95% of what happened yesterday. So we'll just have to see. Like I said, definitely interesting markets to say the least. We'll wrap up with the profile. I mean, profile wise, one thing that did catch my attention, and once again, unless you have software that specifies looking for VPOC or looking for amount of time and all that stuff, I thought it was interesting that we had the VPOC almost right out of the gate, like that first 30 minutes, first hour or so, we had almost 18,000 contracts traded, because once again we only had 3 periods that this touched at this range. So each letter is 30 minutes. So you can go from there, this is 9:30 to 10, 10 to 10:30, and then 10:30 to 11. So after 11 o'clock, we never saw these prices again as far as going up here. But look at the amount of volume, especially at the 48.05. I don't know if there's an algos. Maybe that was some of the top people getting out. Because just for reference, I mean, look, all day or whatever, 15,000, 13,000, 19,000. So a little, but my point is we saw that number quick. Normally, those other ones are the entire day. This was like this right out of the gate. So that was interesting. I don't think it was buying because of how much volume that was. And we didn't go much higher. What, 3 points? And then in the grand scheme of things, we did take out the high from overnight. We did have all new, all-time highs. So when you have that type of check mark, it wasn't a bad day in that sense. It's just the fact that we did end up, taking out the lows from the 28th, the 29th, the 30th. I did mention in the room that this area, I assume, would probably be somewhat of a safety net. And sure enough, it was. Not that it's always going to work that way, but we had halfback, the most time spent VPOC. So, and the red is for each day 30% of the top amount, or most of the volume was. So, it's a good 10 point range or so. But I just assumed from those 2 days that there was a good amount of volume there. Probably the third for the month for this contract so far in here, around 47.70 area. I just assumed that it would potentially be somewhat of a safety net without giving an exact level, just an area of a potential slowdown. And sure enough, did come into it and then slow down and reversed a bit. We did get all the way back up. I mean, there was a nice midday rally. I mean, we weren't what? Not even just about 10 points from the highs of the day at the end. And then one thing is we did see a decent amount of selling, and then settlement was below halfback, which is something to pay attention. And technically on paper, we did spend more time below halfback. The way I view halfback is just picture Squid Games or any, bull and bear, just tug of war. Where was the most time spent? Where was the most volume? And this, like I said, today was a pretty decent disconnect. I can't remember the last time I've seen VPOC be that defined in the beginning of the day. Normally, it might come up, it might come down, and that number will switch. Realistically, it should have migrated lower. And granted, there was 15,000. So there was a chance for it to happen, but it didn't. So that was a good amount of volume out of the gate. It looks like it was probably selling, to be honest. But anyway, we'll just have to see. Not horrible. Like I said, we did take out the highs. Closing above halfback or building out kind of like a balance, kind of copy and pasting this over here, I think would have been best. Once again, kind of one-time framing higher. But we didn't get that. But yeah, we didn't go out of the lows, so kind of somewhat pretty close to halfback. So I would consider today, meh. Not horrible, not great. But we'll have to see. Futures opening up here as about to end the video. Pretty flat. ES down about 2 points. Russell flat. NQ down about 15. And the Dow about 18. So pretty flat open. So we'll just have to see how it goes. But anyway, I'm going to end it on that. If you guys have any questions or want to reach out, you can obviously join us on Facebook or go to offthecharttrading.com. You can reach out to us there. As always, hopefully it's been helpful, and I will catch you guys at the next one. Peace out.